G'day everyone, welcome back to another update to Bitcoin and Ripple. Now they're both continuing in a bearish momentum. We're going to include some back testing, and before we go any further, make sure you hit that like and subscribe button to support the channel. Also reference the +1 videos where we do a deeper dive into various trading strategies and to better understand some of the language we talk about in this and other videos on a daily basis. In terms of the outlook, Bitcoin is undergoing a correction from earlier 2025 highs and higher interest rates, inflation and heightened geopolitical risk. Even as institutional adoption continues to deepen, it now appears to be consolidating at around about $90,000 range, with possible support further down around $70,000 to $90,000. Meanwhile, XRP, after a strong rally driven by regulatory wins and ETF anticipation, is facing a pause as technicals weaken and network usage cools. Even though institutional catalysts remain in place, its price sits around about the $2.20 to $2.50 range, with a breakout still possible if favourable macro and regulatory signals align. So starting off with Bitcoin on the weekly chart, you can see there we did actually break below our moving averages on our last update, and that hit's actually broken right through our Fibonacci retrace level with the price below the moving averages, and so is the CCI, so predominantly very bearish at the moment. Now, this Fibonacci retrace happens because we saw this bearish divergence, lower highs on the CCI versus higher highs on the price. We draw a Fibonacci from that high down to that significant low before the divergence started, and we measure that 23-38% as a minimum retrace, and this one's gone down and just shy of that 50% Fibonacci retrace. So again, looks like further downside to go, but we look at the smaller time frame as well to identify any potential reversal. So we go now to the daily. And on the daily as well, that's also bearish, with the making a couple of little retraces throughout that period from where that red arrow is indicating. You would have started going short, and you would have closed it out each time if you're trading on the daily, whenever that CCI broke into that moving average range. Notice I prefer to close it out at that level there, for example, on that candle, because notice that you get it right near the bottom based on that CCI. Let the CCI rise and then fall again, and you would have entered another position on that candle, let it drop again, closing it out possibly on that little range there on that candle, and going short again on the next day of trade. And you'll still be in a trade today if you're going short at the moment. Also, there's no divergence currently in place to be concerned about on the daily, so we go look at the 1 hour time frame. Now on the 1 hour, you'll notice here, first off, the price is broken above, and so is the CCI. Actually, they're both just hovering in or about that moving average range. But also notice, importantly, we've got this higher lows on the CCI versus lower lows in the same period on the price. That's a bullish divergence. And to draw a minimum target range. Now, I don't trade these, so don't go placing long orders here. My strategy is to go in the direction of the higher time frame. So if you're trading on the hourly, I prefer to trade in the direction of the daily, and the daily at the moment is showing short positions. But at the moment, you'll see there our minimum retrace is at 23 to 38% range, and you can see it's already hit it, and that's all it really needs to do to activate that, complete that bullish divergence. Sometimes it just touches it and bounces and returns to the downside. Other times it fluctuates in that range before consolidating and doing something up or down. Other times it breaks right through. At this point, we don't know where it's going to go. We just keep monitoring it. And at the moment, it's somewhat neutral to very slightly bullish, but I wouldn't be placing long orders, as I said, based on that. Now, going back to the daily for a moment, as I said, you would have been going short on the hourly if you're trading on the hourly in accordance with the daily trend. And on the daily trend, we go to the short positions here, and you can see there, taking those little short entries when the CCI and the price moving averages are in a downtrend, and closing it out when they start turning up, especially when the price does. You'll notice here we had a very sharp incline on the CCI, and then eventually the price as well. So you would have had a nice little trade there. Again, going short during that little period, you would have a couple of average downs during that little period. You need to give it time to breathe sometimes, let it go to average down. And again, letting it close out when you see that moving average on the CCI and the price turning up. Also notice back here we had a bullish divergence, and that's ideally where you would have closed it out, and at that point there. Notice he had a massive drawdown. Obviously the price is going against you. You should not be in a trade there. If you're going short at that point there, with the CCI and the price in a decline on the moving averages. At the very latest, you should have got out, maybe holding a contract or two at that point there. So a small loss, but not as bad as that drawdown there. Let it go through the whole period, as I said. And again, notice here at the moment, if you're going short during this period and you're holding on a contract or two, you'd be closing it out somewhere at that point there with those moving averages in an upswing. So Ripple on the weekly likewise is bearish with the CCI below the moving averages, and so is the price. And that was an effect of this bearish divergence, lower highs on the CCI versus high highs on the price. We drew a 23-38% Fibonacci range. You can see there it touched it a few times, hovered around that area, finally broke into that area, and then finally it's broken below that. So we don't know how far it's going to go. We always just take it one step at a time and looking at all the charts. So at the moment on the weekly it's bearish. On the daily, likewise bearish. The CCI and the price are below the moving averages, and there's no divergence to be concerned of at the moment. And if we go to the 1 hour time frame, similar to Bitcoin, this is bounced slightly with the CCI into that moving average range, and so is the price just above that moving average. But again, don't go long until we see the daily also start taking a more bullish turn. At the moment, let's see if there's any divergence. You could argue very narrowly, slightly lower lows there versus higher lows there. And often these very narrow divergence have a more volatile swing in the opposite direction. So in this case, so far, it's moving. Now, again, notice with the Fibonacci retrace, if we took it before the divergence started to that significant high, it went straight, almost immediately broke through, and it's currently sitting around the 61% level. But let's be adventurous and take it to that level. You can see there as well, it's already hit that 23-38% range as well, and it's currently hovering in that range. And again, we don't know how far it's going to go if it does keep going higher. But again, don't go long until we see the daily break into a more long positioning. Otherwise, if they both break to the downside below the moving averages on the CCI and the price, then you can start taking short positions according to the daily trend. Now again, looking at the daily for a moment, predominantly short trades to be taken at the moment. We go to the back test, and that's where we've got back tests here. Again, notice here we would have been going short and closing it out with these major moving averages moving against us. So you would have closed it out there on the first instance. The CCI here was giving you early warning, and you wait for the moving average of the price to start turning up as well, and you would have got out there, in this case, holding no contracts. Going short again there, and then closing it out at that point there. Again, might have been a small loss or small hit you would have taken, but again, notice here we were seeing, you had a couple of warnings here. The first one there being just before that further happened, that further position was taken. You had the first, let me zoom in a bit, you had a first bullish divergence at that point. You would have got out there, and then the CCI and the price dropped further again, and you would have got caught with your pants down, possibly holding a few more contracts, and that would have been closing it out there as well. Again, avoiding trading in an upswing and trade more on a downswing there. You can see there the profitability was rising as the moving averages were dropping. Avoid the upswing. Now wait for this bearish divergence to kick in, and you probably would have got in somewhere in this range when the moving averages started to turn down. Notice his consolidation period, and the reason I'm zooming out here is I want to see the moving averages. I don't really focus too much on the price on the bars. I look at the moving averages, and when they start turning down like I did here, that confirms this bearish divergence that's happening back there, and that also allows for your profitability to rise as well with a downswing if you're going short. And more recently, as I said, following that pattern, you would have maybe taken a little position there and closing it out, similar to Bitcoin, closing it out when you see both the moving averages start to turn up at that point. If you'd like to get some share trading ideas, why not subscribe to the Patreon page? We cover a bullish share scan each weekend for various regions of the world. These are some of the shares we've traded in the last 2 months, reaping $4,672 in Aussie dollars since we started about 2 months ago. And in terms of percentage return, that's 12.48% returns. So to get access to that scan each week, consider subscribing to the Patreon page. Links in the description below. hit that like and subscribe button. Thanks for watching, and see you in our next update.